Every year I see the exact same thing. Franchise owners that walk into tax season like it's a checklist item, like an annoyance that you have to get done. But here's why you should flip that on its head and take tax time a little bit more seriously. Tax mistakes don't just cost you money. They can cost you time, peace of mind, even your entire business. And the worst part is, all of those kind of disasters can be avoided if you're working with the right people, and again, you're taking a little more of a serious approach to your taxes. So let's talk about it. Tax season. Rather than just thinking about it as forms and deadlines, look at tax time as an opportunity to really save as much as you can and put yourself in the best spot possible to succeed. You really can use tax time to set up your financial strategy for the rest of the year. It really comes down to planning and knowing what you should do and what you should not do when it comes to tax time. So here are the biggest do's and don'ts that we see every year that you should take into consideration to have really smooth sailing for your season. First thing you should do is keep your records in real time. Waiting until your tax deadline or maybe the weekend before to start to gather your records and clean up your books is a terrible idea. And it's a terrible idea not just because it's stressful and there might be an accuracy issue where you're gathering things quickly, you're putting the wrong information into your numbers, but really what it means is you haven't had your numbers up to date the entire time. And that kind of leads to the question of how do you know if you're operating correctly? So if you just wait till tax time to get your books together, your numbers together, then that means you're operating kind of blind. You're just maybe going by, hey, how much money is in the bank? Is that more than how much I owe on the credit card? I'm good. That is not the right way to run your franchise. Here's a big don't. Don't just rely on automated tax software or AI to catch everything when it comes to your personal tax situation. And believe me, I'm an advocate. I know that these tools have become amazing, but they make mistakes, they miss things, they might not fully understand your personal situation like a veteran accountant or CPA could. Somebody with a dozen or more years in experience that is intimately familiar with your situation. AI is not quite there just yet. Now, this is a big do. Strategize about your taxes before the year ends. So we talk a lot on our channel and in our firm, just in general to our clients, about the importance of tax planning, being intentional and going, I'm gonna figure out how the year is gonna go. I'm gonna put an estimate to it, and I'm gonna really understand my situation, and I'm gonna do the things that I'm allowed to do to go ahead and pull my taxes down, to pay less. About 90% of the things that you can do to reduce your taxes have to happen inside the year you want them to happen. So let's take right now, for example, it's October of 2025 as I'm recording this. You have about 3 months left if you're concerned about your tax bill for 2025. So again, about 90% of what you can do. If you want to reduce your 2025 bill, which you're going to pay at the beginning of 2026, you have to act right now. Like, we're already behind the 8 ball if you're just now starting to think about planning. So again, don't wait until the year ends to go, what can I do to reduce my taxes? You have to be a lot more proactive than that. This is a good one. Don't bring your taxes to your CPA or accountant the weekend before the returns are due. I mean, you might want to at least get an extension, but if you wait until the very end to then come to your CPA and say, hey, can you do my returns? Well, guess what? The line's like this long because a lot of people end up doing exactly that. If you're proactive, you're planning during the year, you've got all your information gathered right in December and into the beginning of January, then you should have a really smooth time when it comes to getting your taxes done. This is a big do. You really want to understand how does your entity work from a tax standpoint? Are you an LLC? Do you have an S-Corp election? Are you a corporation? corporation, a C-Corp, a partnership. All these different structures have completely different ways when it comes to how you're taxed. So for example, if you're an S-Corp versus if you're an LLC that didn't make an S election, I'm going to tell you two completely different things to do to optimize around those structures. I'd probably also want to take a big step back and understand, like, why did you do S-Corp? Why did you stay at an LLC? Because it could be that that's not even right, depending on how you figured that out. So you really want to understand, again, how your structure works for taxes and what you can do to take advantage of that. I have a really big don't for you. Do not co-mingle your personal and your business stuff. Personal expenses should stay on that personal Amex, on your personal checking account if you have to, and business stuff should stay over with the business stuff. Why is this important? There's a number of different reasons why this is so important. One, if you want a clear and accurate picture of how the business is doing, and tying into our tax discussion, if you want to make sure that your taxes are right, you got to keep only the business stuff together. That's a true picture of how the business is doing. If you're spilling in your personal stuff, then you're kind of muddying the waters or creating kind of a false image of how the business actually did. In that same vein, just from a decision making standpoint, if you're trying to figure out how is the business doing, you could get confused and think, oh wow, it's doing worse than it is, but that's because you're running a bunch of expenses, your home expenses and such, through the business. Another reason, and this gets more into a liability discussion, we're not attorneys, but there is a topic of concern around what's called piercing the corporate veil, where if you cannot establish that the business truly was only acting as a business and completely isolated and separated from you as the owner, if you can't prove that, then the limited part of the limited liability of an LLC or corporation, they could potentially get through that. So that's just one more reason why keeping your personal and business separate is going to help you so much. Now, this is a big do when you're thinking about getting professional help like CPAs, attorneys, and so on. You want to work with somebody that has specialty in what you are doing. So if you're a franchise owner, which is who we connect with and work with, you really should work with professionals who understand what it means to have a franchise. How does a franchise fit into your greater portfolio? How exactly does a franchise work from a tax standpoint? And how is that different from a non-franchise, just a privately held company, for example? If you work with a professional that does not understand these things, then that could lead to mistakes, that could lead to things taking more time, delays. You might be a learning curve for them to figure this out, and you're paying for that essentially. So definitely make sure to work with professionals who understand what you're doing specifically. Tax season, you really could take it in one of two ways. You could either go I'm just going to keep doing the same old thing. I'm going to delay everything till the last second. This is going to be stressful and painful. I'm going to extend and take the longest possible time to get this done. And I'm probably going to pay a lot more than I should be. Or I'm going to be intentional about this. I'm going to plan before the year ends. I'm going to save a bunch of money on my return. Then I have all my records that I kept all year long. So I'm going to get everything to my CPA really fast. And I'm going to get my returns done, not extended, but at the original due date in March or in April. You got to kind of decide which path makes the most sense for you. And look, here at My Franchise CPAs, this is what we do day in and day out. We help franchise owners with their tax returns and with strategy components. So we're doing the planning with you before the year ends. We're making sure that all this stuff that you can do to bring your taxes down, we're doing it. And we're taking care of all that end of year compliance, so you don't have to worry about any of this stuff. If you check the description below, there is a booking link. If you want to speak to a member of our team for an absolutely free consult, we will go through your situation really quickly and figure out, are you hitting the mark, or are there some big things like what we've been discussing that you're not doing, or mistakes that you're making that we can quickly fix. If this is the case, again, scheduling link is in the description below. Go ahead and book that call. Spaces are filling up fast as we enter Q4, so you don't want to wait if you feel like this could be helpful for you. And hey, if you just have a general tax questions, I'd love to see them in the comments below. Also, don't forget to subscribe for more tax tips and business advice for franchise owners. Look forward to seeing you in the next one.